welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will open the stage to get all your stock-related queries answered by our experts. And don't forget that today is Buy Now, Sell Now Pathshala Day as well, and we will connect live with Kunal Bothra. But indeed an important day for the markets as well, Cheryl. And as they say, sometimes no bad news is also good news.
Absolutely, and hopefully we weren't expecting a bad news to come out of the MPC policy meet as well. Shrishti, if you look at it, status quo is what has been maintained by the MPC when it comes to the rate trajectory, when it comes to the stance, as well as if you talk about the CPI inflation target for FY24 as a growth target coming in for FY24. All of them have been maintained for now. So yes, and also you have certain actually comments coming in from RBI governor, whether it comes about the inflation trajectory, the way how the MPC monetary policy will be guided going ahead. Those all were crucial developments. But after the MPC policy meet, we did see the markets actually climb up. We've seen markets actually rally to the day's highest point. As you can see on the screen, 0.5% uptick coming in for Nifty. Take a look at Nifty Bank, because that was the one that actually led the rally in the markets. You have Nifty Bank moving in tandem with the benchmark indices, tad bit off the day's highest point. Nevertheless, the rally seems to be intact as of now. Talking about the list of gainers and the losers, it will be really heartening to note the fact that there are only 6 stocks on the Nifty that are on the losing end as we speak, and they are actually ONGC, HUL, Bharti Airtel, Power Grid. They all are actually seeing declines, but less than 1% is what they are clocking in right now. But talking of the flip side, you have Bajaj Finserv, that's the top gainer on the Nifty, 3.3% uptake. Titan, HDFC Life, ITC. Add to that is Tata Consumer as well, that is actually buzzing in today's trading session. And talking about the sectoral indices, then it's actually a sea green when it comes to the sectoral indices. All of them are actually in the positive territory, with the Realty Index taking the lead, and along with Realty Index, you have PSU Bank Index also that is seeing good uptick as of now. So that's the way how the market construct is looking like right now. Shrishti, a good day for the benchmark indices at least.
Well, yes, indeed. We are seeing good gains on the benchmark indices as well as broader markets are supportive. But with this, let's move on onto the show and let's connect with Kunal Bothra then and go across to find out which interesting topic he got for our viewers today in the Buy Now, Sell Now Pathshala. Take it away, Kunal.
Thank you so much for that, Srishti. So it's a topic which I think many short-term traders, they generally look out for, especially in a market which becomes a bit more volatile all of a sudden, or in stock prices when it becomes a bit more volatile. But today's session is specifically towards the upward gaps and how to identify gaps. So I've taken 2 examples of charts, and I've specifically kept Nifty to be discussed into detail. So the first charts which we'll be discussing would be on Bank of for Bajaj Auto. Now gaps generally have a tendency of acting as strong resistances or strong supports for stock prices. So this was the chart for Bajaj Auto over the last 2-3 months when the stock moved up from 4,500-550 mark towards a point when the stock was almost at 5,200 levels. Now interestingly, that in this entire rally there was this very strong gap which was created for the stock price. Now this gap, which is around 4,850 to 4,900 odd mark, that gap acts as a major support for the stock price in case if the stock gets into a mean reversion. Now in the last 1 month, the stock went up higher to 5,300, then corrected back, and as you can see that it's taken support at this gap level. Now the stock could be on course of starting off a fresh trend and hopefully breaking past about the previous size of 5,300 out for Bajaj Auto. So that's the importance of gap, that whenever you see a gap, it generally acts as a major resistance or a support. Now I've taken the Nifty charts to be more discussed into detail. Again, a very similar kind of a chart for the Nifty from the June-July points when the Nifty formed the the third major gap. Now third gaps generally are called as very important gaps because they determine that the index or an asset class moves into a higher range. So this was the classical case over here for the Nifty. As you can see, 2 gaps earlier which was seen for the Nifty, and the third gap becomes all the more crucial. So if the third gap remains to be unfilled, then we said that the index still remains to be into a strong trend. And from the June highs, the July top, the correction till August, the recent top in the month of September, and even the correction, we've not yet filled the gap for the index. That itself indicates that we are already into a very strong and a fierce uptrend for the indices. Now what matters is the short-term charts. Now this is the very recent chart, so I've tried to extrapolate this interesting aspect of this short-term charts and looked at the third slide, which is that what happens when the gap on the downside and how the gap acts as a resistance. So as you can see, the first gap which was created around 20,000, 20,100 mark, this was the second gap, and this is a third gap. Now, interestingly, day before yesterday's candlestick pattern, when the Nifty formed 19,300 mark, there was two gaps which were created: a down gap, a bullish pattern, and then an upward gap. Now, this is a classical pattern, which in fact I'll discuss it in the next Pathshala session. But this is a very important gap, very rare patterns which happens on the indices. But this holds a lot of prominence. It's actually called as a fulcrum point for the index, because trends and supports, they change at these kind of patterns, which we'll be discussing in the next session.
All right, so just to get the headline as to which is the topic that you're going to discuss next Pathshala session, because Abhishek, our producer, is definitely taking note of that, Kunal, and also most importantly, since it's World Cup season, I'm hoping that you're going to be there next Friday, isn't it?
Yeah.
Or it's just a teaser, picture abhi baki hai, isn't it?
Absolutely. Once committed, I'll always deliver.
All right. I'm not going to translate that in Hindi. Isn't that Salman's dialogue?
I don't think so. I think it's original.
Oh, it's original. All right. Then on the original note, then we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we're starting your queries. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us live. We are on a WhatsApp number that is flashing on your screen. Do remember, you can only send us a message on the WhatsApp number. We will not be able to answer your calls. Do remember to mention your name every time you write to us. Mention the stock that you invested in. If you're already you are looking to invest in. If you're invested in the stock, mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. And talking about our experts today, we have Kunal Bothra as well as Mr. A.K. Prabhakar joining us on the show. A very good morning to you, Mr. Prabhakar, as well as Kunal. Thank you so much for joining us on the show. And let me kickstart taking the first query then. And this one is coming in from Sunny. He's writing to us from West Bengal. And Kunal, he wants your suggestion on a stock where he can get 5% return in the short term.
So I think it's a tough one, but I'll probably put maybe MCX as one of the stock where you can probably get 5% from current levels also. The stock is looking exceptionally strong. I think I'd recommended this around 1775, 1780 a week or so back, and the stock has moved on to the 2000 plus levels. Even at current price juncture, I think it looks very attractive for another 5% on the upside if you're a short-term trader.
Okay, MCX still look good on the charts. But moving on, and Kunal, once again a query for you, because Hemanta wants a short to medium term view on two counters. Firstly is RBL Bank, one of the top gainers today in FNO, holding 200 shares at a price of 249 rupees. And he also has Narayan Hydralaya, 100 shares at a price of 1073 rupees, looking for a short to medium term view.
See, I would recommend to hold on to both of these stocks, even if it's a short-term view. The only differentiation between both of these names is RBL Bank is a bit of a high beta stock. So the stock, I think 2 days back had broken past about 250, 256 odd mark, and yesterday the stock had come back towards 240, 242 levels. So it has this odd tendency of going into a 5%, 7% sudden correction in between. So it's always better to wait out for that point of correction if you're looking to buy or average further. And then on the upside, I think 256 to 260 could be a fresh target range which you can eye, even if you're a short-term trader for RBL Bank. Narayan Hydralaya, on the other hand, it's a completely different kind of a stock. It's a low beta name. The stock has been doing quite well from the 2020 lows. I think 225, 250 was the low for the stock, and it's almost at 1000 plus levels. So it's done exceptionally well over the last 2-3 years, been a consistent performer. I think you should hold on to it for at least another 3 months or so.
All right, the next one is coming from Mali, writing to us from Hyderabad. And Mr. Prabhakar wants to know about JBM Auto. She's already purchased JBM Auto at a price of around 1,450 rupees per share. Around 200 shares of JBM Auto is what she has in the portfolio. Now she wants to know whether it makes sense to sell out of JBM Auto and instead look to invest their money in Reliance Industries. Good move to do that, given the fact that JBM Auto is off her buy price also.
Good morning. No, we don't track JBM Auto, so I won't be able to comment on this stock. In auto, we track a lot of other stocks, not JBM Auto.
Kunal, what's your view on this? You think that a switch is advisable from JBM Auto, remove that money and look to put that money instead in Reliance Industries?
Well, you can look to do that, but I think the charts for JBM Auto, for example, I've been looking very charged up and strong. I think if I'm not wrong, the stock is almost at 1300 levels or 1275 approximately. So correction, but I believe the longer term trend for the stock is attractive. The the benefit with Reliance Industries, of course, is that you're parking your money with a larger cap name, more formidable one, and that too at a point when the stock has come back towards a major support or a pivot support at the 2,300 level. So even that could be attractive. So it's a difficult yes from my side, but I think if you can do maybe part, hold on to part profits for part for JBM Auto and then transfer the balance part to maybe RL, and that could be a better decision.
Okay, Mr. Prabhakar, very good morning. The next question is coming from Jay Krishnan from Kerala, and he wants an advice on two counters. He's been writing to us for quite some days now and looking for a fresh entry in fine organics as well as Dalmia Bharat. How do you look at these counters with a medium-term investment outlook?
Dalmia Bharat, I think it is a good stock to buy at current price also. Fine organic, there is a slowdown in US and even in Europe, and their ingredients goes to these two major geographies. So at current level, and they are not able to expand their capacity also. So at current level, if you want to buy, you just wait for 1 or 2 quarters, and once they announce expansion plan, it is safer to buy fine organic.
All right, this one is coming from Kannan, writing to us from Chennai. Kunal, he's given two stocks and wants to know where you see these counters, one in the next 6 months, one in the next 1 year. One is for Manappuram Finance. In the next 6 months, where do you see this counter headed? And PNB in the next 1 year, where do you see this one headed?
So I'll probably put both of them in a 1 year time frame basket, because I believe both the charts, Manappuram as well as PNB, look very attractive. In fact, Manappuram Finance, I believe that once the stock scales past about the 155 mark, which is acting as a resistance for the stock price, I would believe that the stock should be good for at least another 25% on the upside. So which means that should take the stock somewhere closer to 190, 200 approximately for Manappuram Finance. So looks attractive for that kind of a potential target range. For PNB, I think the near-term target range which I'm looking out for is 90 plus for the stock price. Even though in the last 2-3 days the stock has corrected from I think 83, 84 to 76 or 77 levels. But I believe that once the momentum comes back into the PSU banking names, I would believe that PNB should be ripe for at least another 10% of a higher upside from the previous swing high. So 90 plus could be a target which you can benchmark for PNB as well.
Okay, Kunal, the next query is from Raja and he wants your advice specifically on Symphony. Do you believe that this will be a good bet for a long-term investment, and can he go ahead and invest in current market price? If not, then any price point for the same?
See, I would recommend not to, or rather I would not recommend to buy the stock at current levels. In fact, what has actually happened is Symphony over the last 6 or 7 years has become a lot more stagnant kind of a stock. So it's not that the stock is showing a very sharp or a massive correction for itself, but the major part of the correction I think happened in 2018-19 for Symphony, and from there the stock has just been on a drag for itself over the last 4-5 years from post that correction in 2018. Now the concern with the stock is that the volumes have dropped down. I think if I'm not wrong, the daily volume for the stock is just about some 4,000, 5,000 shares. So that makes the liquidity crunch also a lot more tricky. I would suggest not to buy into the stock. If you're looking at a similar space, I would recommend maybe look at Havells as well as Voltas. I think both of these stocks, they look actually very strong even from current levels. And my sense is that both these stocks can show a decent upside over the next 3 to 6 months.
All right, this one is coming for you, Mr. Prabhakar. This one is coming from Muni Rajulu, who's writing to us, and he wants to know about TCPL packaging. About 50 shares at an average price of 805 rupees per share. He wants to know whether it's good stock to be in for a period of at least 5 years and 5 years and plus.
So, caveat is I also hold the stock. I'm a long-term investor. But very important is valuation is very attractive, and their expanded capacity is also coming on stream. And when you want a packaging which is more of natural, then TCPL will be the major beneficiary. And with India exporting almost 80,000 crores of mobile phones, where TCPL is a major player, I think the growth in mobile phone export will benefit TCPL in a very big way.
Okay, moving on then. And Kunal, what's your view on KPR Mills? Anand Krishnan from Madurai has 100 shares at a price of 777 rupees. Sitting at some bit of a loss at this point in time. What are the short-term prospects for this one?
I would expect the stock to get into a further leg of correction. So, it formed a double top pattern on the daily charts. 795.96 was the previous highs the stock had made in the month of September. And I think very recently, just few days back, the stock retested this level of 790 approximately, failed to cross over about those levels, which means that 790 mark could be a bit of a hurdle for the stock price. But I think on the other hand, 720 is a strong support for KPR Mills. So if you're looking to buy the stock or maybe add further, I think closer to 720 is where you should look to accumulate further.
All right, let's take the next one then. And this one is coming from Yuvraj from Chennai. This one is for you, Kunal. He wants to know about REC. He is looking to hold on to this counter for the long term, but he wants to know if now is the time to start accumulating REC.
See, it's a bit late, frankly, to accumulate REC because, I remember, I think, highlighting the stock when it was sub 200 levels, in fact, 160, 170s for REC. Now the stock is almost at 280 plus levels, which means that the initial advantage of 50% upside is behind the stock price. Now, it also doesn't mean that the stock may not see a further upside. I do believe that the stock can see a further upside. But what happens in these cases is that the time horizon to hold on to these stocks extends. So what initially could have been maybe a 2-year, 3-year target, that extends to maybe 3 to 5-year target for such kind of stocks. And in that kind of a time span, there's a lot of uncertainty which builds up, price volatility, fluctuation which enters into the stock price. So I think only on that aspect, I believe that it may not be a great time to buy the stock. Wait out for a correction, a sizable correction of 10-15% could be a starting point for you to enter into the stock.
Okay, moving on then, and Mr. Prabhakar, the next query is coming from Padma Sivarao from Bangalore, and he wants your advice on two counters. Firstly is Borosil Renewables. He's holding 50 shares at a price of 488 rupees, and he also has Vare Renewables, 20 shares at a price of 1343 rupees. He wants to know, is this a good time to add more at current market price, and what is the outlook going ahead?
Borosil Renewable, I think, that is a very good stock, so any correction would be an opportunity to buy. But Vari Renewable Tech, we don't track it, so we won't be able to comment.
All right, moving on then. This one is coming from Dhruv. He's writing to us from Pune. Kunal, he wants to know about Bajaj Hindustan. He's already purchased the stock, 222 rupees per share is the price, about 1000 rupees per share. Now, what should he do, given the fact that this one also is marred by a lot of negative news? Bajaj Hindustan, 22 rupees, he's already making a profit. Should he look to exit?
I think you should look to exit and come back towards the traditional larger cap name in the sugar pack, a formidable name in the sugar pack, and that's Balrampur Chini. So I think at 20 odd levels, if I'm not wrong, for Balrampur Chini, looks very attractive. So it's good time to make a switch.
Okay, good time to make a switch in the sugar counters. But with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now. Taking a look at the markets then, they seem to be losing steam as of now. Nifty is still holding above the 19,600 mark, but for the Bank Nifty, we are seeing Bank Nifty drifting from the day's highest points to the lower point and holding gains of 70 odd points as of now. But with this, let's move on and once again get back to taking all your stock related queries then. And Kunal, the next query is coming from Prathamesh from Mumbai. He wants your take on Uno Minda as well as Subros and wants to know, are these good buys at current level for a period of next 1 year? And if you're not, then any alternative that you wish to suggest?
I think Subros could be a bit tricky. The stock is a bit of a high beta. I think the stock had seen a sharp rally was in the month of June end, and that was back of some extremely strong price movement for just a few days, and the stock had moved from 360 to 520. Post that, we've just seen the stock going into a correction. So it's a bit of a high beta stock. I would be a bit wary of such kind of names if you are looking to allocate some of your entire portfolio. Uno Minda, on the other hand, I think that's a more stronger chart. It's been performing quite well. It's come back towards a mean retracement, just holding on to a consolidation range around the 590, 595 mark. So I think it's an attractive territory we may look to buy at current levels.
Okay. Okay, this one is coming from our first time writer to us, or a viewer who's written to us for the first time, Ajit Walder. He's writing to us from Oman. And Kunal, I'll take this query to you because you'll be able to maybe give him a better direction when it comes to Brightcom Group. He's already purchased a lump sum of shares. I'm unsure whether he's saying 10,000 or 1 lakh shares, but a price of 32 rupees per share. Your advice is to exit?
I think, and it doesn't make sense to hold on to these kind of fancy names, and especially at a time when stocks have these habit of going into up circuits, and it looks all hunky dory when these stocks they perform quite well, but on the way down, the correction has also been very sharp. I think we've seen so many historical cycles across the stock asset classes where stocks move up 50%, 5x, 10x in a short span of time, and then the correction leaves the stock maybe 50% to even 80% lower from the previous high. So it's always better to try and accept that these are not the stocks which should be worth keeping as part of a portfolio. So I would suggest an exit even at current levels.
Okay, moving on then, and Mr. Prabhakar, another viewer who is losing money is RK, and he, in the month of September, bought two counters. Firstly is Rain Industries at a price of 181 and Linde India at a cost of 6,600 rupees, and he's been losing over 10% in each of these names. So what's your advice? Should he stay invested in these names or move out then?
See, Rain Industry, they are into aluminium. I think there it is more cyclical in nature, and they have unit in US also. So any company where their revenue is more from abroad, I normally avoid it. So Rain Industry, I will not give any view on that. But Linde India, see 10% correction for an investor should not worry. It is a very good company, and they are in oxygen and even in hydrogen. They are trying a lot of things. So once green hydrogen is successful, term prospect is very good. So any good correction, another 10-15% correction should be an opportunity to buy in Linde India.
All right. This one's coming from Anand. He's writing to us from Goa. 100 shares of Gabriel India is what he has, an average price of 167. He wants to know whether he should book partial profits in this one at current levels or hold for big gains, and he wants to stay put with this counter for the next 1 to 2 years. 2 to 3 years. So, Mr. Prabhakar, what's your take? Do you think that Gabriel India will be able to post larger gains going ahead based on fundamentals, or should he look to book partial profits and instead put this money somewhere else?
No, I think Gabriel is a hold from my side. The prospect for auto is very good. This sector has not performed. Now only the numbers are starting to flow. So I think Gabriel is a hold from my side.
Okay, moving on then, and the other query, another query is coming is on Lemon Tree. This counter has been on the radar of Kunal, so I'll not come to you for this, Kunal. Rather, I want your take, Mr. Prabhakar, on this, because Subramaniam from Chennai has bought 50 shares at a price of 91 rupees. There has been some news flow around Lemon Tree as well. So how do you see this counter on the fundamental side?
No, they are opening a hotel in Mumbai near the airport where 670 or 669 rooms are coming. So it is one of the largest property, and with people are saying that cricket match is starting. So Lemon Tree is going to be the major beneficiary of that. So we are very positive, and it has been a very aggressive management in hotel. So we like hotel stock. In that, Lemon Tree is our top pick also.
Coming in from Aman Khan, he's writing to us from Jaipur. He wants a view on Metro Brands, and given the fact that he's not mentioned whether he's already invested in the counter, whether he's looking to invest in the counter. So let me take this one to you, Mr. Prabhakar. What's your take coming in on Metro Brands? Do you think that this one is a good fit if someone wants to enter into right now, or if someone is already entered, what should their strategy be with Metro Brands?
See, footwear as an industry is growing at, mid single digit. So that is one thing, we need to understand. So it is not going to be runaway. But Metro Brands has a lot of other brands which they are marketing. So, I'm positive for a long-term purpose, but short-term, there are going to be, slow growth, and, it will take time. So if you have 3 to 5 years, then go ahead and buy. Otherwise, just wait out. There will be a good opportunity to buy at a later point of time.
Okay, Kunal, what's your take on IEX? Krishna Kumar is holding 10,000 shares from a price of 165 rupees. Good part is that the stock is trying to take a breather at 130 odd level. So do you believe that in the next 1 year, there could be some recovery for this?
See, I believe that the stock should recover, but I'm not sure whether it will happen in the next 1 year or so, because of the adverse news flow the stock had seen. I think in the last 3 or 6 months, there were two, I think if I'm not wrong, negative news flow for the stock price, which impacted the stock price trend. Now that generally would probably at least take effect for another at least 1 or 2 quarters. So for the next 6 months broadly, I don't expect any too much of a strong price movement for IEX. But it also indicates that maybe the stock could probably gather steam post the next 2 quarterly movement. So I would actually expect that in case if the stock corrects and say comes closer to the previous major lows of 120 approximately, I think that could be actually a good time to try and average further for IEX.
All right. This one is coming in from Satya, and Kunal, he wants to know about Tata Chem. He has already at a price of 1,060, Tata Consumer 770. He's asking whether it's worth holding both of these counters for the medium term, or should he switch one for another stock altogether?
So Tata Consumers you can hold on. Tata Chem I would suggest to switch, because the stock has been a bit of a disappointing chart. Now frankly, the stock over the last 2-3 months I think had shown a triangular pattern breakout. The breakout was at a point successful. The stock moved from 1000 to I think 1100 mark in a matter of just about few days. But then post that, the correction has brought the stock back below that breakout zone of 1000 odd levels currently. So I believe Tata Chem is something which I would suggest to exit. Tata Consumers you can definitely look to hold on.
Okay, Mr. Prabhakar, the next query is coming in on Bayer Crop Sciences. G. Muni Raju from Chennai is holding 120 shares of this counter from a price of 5,100 rupees. Since past 2 years, he's been holding this one, but at a mild profits in this counter, but good to hold for the long term.
The agrochemical, what has happened, I don't know. None of the agrochemical companies have given any return in the last 2 years. And the prospect also, I cannot visualize whether in the next 2 years, we will make money. So, if you can visualize, then it is okay. Otherwise, I will suggest that you shift on to something else where returns can be made. Hotel is something which looks good. I think lemon tree or something else in hotels can be, something you can look on. So, agrochemical has not done well. Reasons beyond my capacity to understand, but agrochemical as an industry has not done well.
All right, the next query that I have is coming in from Ramki. He's writing to us from Delhi, and Kunal, this one is specifically for you. What he's saying is that Kaynes Technology, various analysts, he's saying he suggested to wait for a correction in this counter at around 1600 to 1700 levels, but from there on the stock has only rallied one way up move to 2500 where the stock is at currently. Now he wants to know what should he do. Should he look to buy this counter, given the fact that he's been interested in this counter, has been waiting in the sidelines forever? What's your strategy now for this one?
See, I understand that the stock has not given any correction or any major correction, and I think it's just gone through a time-wise consolidation. That generally happens when there is a lot of fresh fund flow which happens into stock prices, where these stocks, they hardly go into a major price correction. They see less volatility, more of time correction, and then a further continuation of rally. But then there comes a point where these stocks get into a zone when these stocks are extremely overbought. As of now, for example, on the daily charts, the RSIs for Kaynes Technology is upwards of 80 plus mark for itself, which means sooner or later the stock would probably get into an overbought territory. Since you waited so long, I would believe that wait for maybe another few months, the stock could probably get into that corrective phase. And if that happens, you can then start to buy staggered on dips. You don't have to wait for 1700 as such, but if you get maybe another 200 points as a starting point correction, you can start accumulating from those levels on dips for Kaynes.
Okay, that's the view on Kaynes Technologies. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries then. The next query that I have is coming in from our Raju. Okay, let me take this other one, which is coming from Nishi. He's writing to us from Bangalore. Nishi has been constantly writing to us. He's bought BSE at levels of around 302 rupees per share. Kunal wants to know whether he should hold or book profits on BSE right now.
At 302,
That's
the buy price.
the buy price that he's mentioned, yes. Where is the BSE right now, Abhishek?
It's at 1400. So
1400, okay, fine.
Phenomenal gain for the viewer. So, sorry, I was just rechecking the buy price, but I think it's been an exceptional mover. BSC, I think if I'm not wrong, even CDSL over the last couple of months, I think have started to show a lot of price action, positive price action for themselves. I think these are stocks which you should hold on for a longer term play. Now, since you've bought buy prices almost at 300 rupees, you have a huge buffer to hold on to the stock. So I won't recommend a exit the stock. You may look to maybe book out some profits over here just to book out your capital price or your capital as such, but hold on to the major quantity for BSE.
Okay, moving on then, in Mr. Prabhakar, Raj from Vadodara has bought shares of Just Style. He didn't mention his buy price, but he's looking out for any sort of a target by you that that is possible to achieve in the next 3 years.
We don't track the stock. It is a digital thing which is very difficult for somebody to understand of my age. So I give a pass to this.
Kunal, quickly, anything on the charts?
I would recommend not to trade the stock. In fact, if you already have holdings, look to exit.
Okay, this one is coming from Pranjali, who's writing to us from Kolkata, Kunal, and she's holding 500 shares of Balaji Telephones at a price of 39 rupees per share. She's mentioned that she's enjoying more than 60% profit in that particular counter. So now should she look to book profits, hold for much higher levels, say if it hits 100 rupees, or what sort of a strategy should she adopt given the fact she's sitting on very, very healthy profits?
I would recommend to hold on to the stock. Now, again, I understand it's a high beta name, but then the chart patterns for Balaji Tele is looking attractive on the long-term basis. The stock for the first time, even though the prices have not hit a multi-year high, 2021-20 high specifically, the RSI has managed to climb above those levels, which means possibly in the next 6 months to 1 year, the stock may try and attempt towards breaking past about the 2020-21 high, which is 100 plus levels. So that could be a potential target range, which you can keep an eye.
Okay, but with this, let's start taking all your queries in the rapid fire session. And Mr. Prabhakar, any view on CET? Dasari Radhi has been holding shares from a price of 2,230 rupees. Wants a target for the next 1 year.
Tire stocks have run up too much, so exit.
All right, Kunal, Renuka from Trivandrum is sitting on a 50% profit on Bank of Maharashtra as well as NB. Time to exit.
You may book part profits over here, but don't book out full profits over here.
Okay, the next query is from Ram, and Kunal, he's holding NBCC, 1,000 shares at a price of 95 rupees, needs a short-term target.
Hold on to it, and if possible, look to average closer to 55. Look out for targets in the range of 66 to 70 plus.
Kunal, Vidya wants to know about Kajaria Ceramics, right time to buy, and if yes, then what sort of target should she look at?
It doesn't look attractive on the charts. I would recommend not to look at it currently. In case if the stock dips towards 1250 mark, that could be a point where we look to buy.
Okay, the next query is on Tata Motors, Bajaj Auto as well as M&M. Mr. Prabhakar, Krish has been holding shares of Tata Motors, all these three auto names, and having decent returns in this one. So good time to book out profits or continue to hold on?
I will suggest continue to hold on.
Okay, this one is coming from V. Ravichandran. Singer India is a stock he's bought with a 3-year view at around 100 rupees per share. Should he look to invest further at current levels? Singer India is the stock, Mr. Prabhakar.
Do not track this.
Okay, Kunal, your advice on Patel Engineering. Garima has been holding 2,000 shares from a price of 57 rupees. Both the stocks are, like this stock is for the next 6 months.
I would recommend to just hold on to the stock, not to add at current levels.
Kunal, Maruti Suzuki is the counter. Anand from Gurgaon has 60 shares at an average price of 9,000 rupees per share, making mild profit. Should he look to sell or average or hold? What sort of strategy with Maruti?
If you can extend your time horizon to at least 1 year, I strongly believe that the stock should scale past about the 11,000 mark. That would be a good profitable zone for you to book profits.
Okay, Kunal, MVS Rao wants a short-term target on Bajaj Finance. He bought 65 shares from a price of 7,140 rupees.
So I would believe that 8,050 mark should be broken for Bajaj Finance hopefully in the next week or so. And beyond that, we could be looking at least another 4 to 5% upside if you're a short-term trader.
All right, with that, thank you so much, Mr. Prabhakar, as well as Kunal, for joining us on the show and taking our queries. And also thank you, Kunal, for the Pathshala today. But before we wind down on this edition of Buy Now, Sell Now, here's an ET Now exclusive. Insurance companies are expecting a relief coming in from GST Council meeting tomorrow. What's exactly the details behind this? My colleague Anurag Shah is here with all the details. Anurag, over to you.
So recently, insurance companies have received GST due notices, especially in the state of Maharashtra. Non-life insurance company like New India Assurance, Bajaj Allianz General Insurance, ICICI Lombard, they have received GST due notices from zonal unit of Pune intelligence unit, and that if you combine all the GST notices non-life insurance companies have received, the amount is around 10,000 crore. So recently these insurers has met revenue secretary and requested about the relief in this, because they have put forth their case that they have actually paid the GST amount, and the co-insurance, the lead insurers are already paid this GST amount, so this due is not legitimate. So in this regard, as we are expecting from, as we have gathered from our sources, that insurance companies are expecting relief on GST evasion notices from GST Council. In Saturday's meeting, it is expected that companies will clarity on co-insurance and ITC recovery notices they have received recently. So it will be a big relief for insurance companies, because if we combine non-life insurance and life insurance companies, these companies have received GST due notices of around 12,000 crore. In life insurance companies also, HDFC Life has received a notice of 942 crore. ICICI Pru Life has received a notice of 492 crore. LIC has also received GST due notices of ITC recovery of 290 crore. So it will be a very big relief. Revenue Secretary has given assurance to insurers that their plea will be heard, and it is expected that in GST Council meeting, the clarity will be given regarding the co-insurance premium and ITC recovery notices.
Well, thank you so much, Anurag, for getting us all those exclusive details. So I will be on tomorrow's GST Council meet, whether or not a relief comes in for the life insurance companies. But for today, the counters are holding themselves in green. But with this, here's it's time to wind down this edition of Buy Now, Sell Now. It's a goodbye from me and Cheryl and the entire team who put the show together. Thank you so much for watching.